Equity Management Academy. September 22, 2021. Gold. To taper or
Hello everyone, this is Equity Management Academy, with a weekly gold report, for October 29, 2021. Summary. The weekly trend momentum of 1796 is bearish. The weekly VC PMI of 1790 is bearish price momentum. A close above 1790 stop negates this bearishness neutral. If short, take profit 1767 to 1750. Trading instructions. Weekly trend momentum, 1796, bearish. The gold futures contract closed at 1757. The market closing below the 9-day SMA 1796 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Strategy. We are coming in with a weekly bearish sentiment, unless it closes above 1796. Weekly price momentum, 1790, bearish. With the market closing below the VC weekly price momentum indicator at 1790, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend to neutral. Strategy. We are coming in this week with a bearish price momentum, unless it closes above 1790. Weekly price indicator. Exit, longs. Sell 1, 1808. Sell 2, 1830. Exit, shorts. Buy 1, 1767. Buy 2, 1750. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1767 to 1750, and go long on a weekly reversal stop. If long, use the 1750 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1808 to 1830 during the week. Strategy. Bearish targets are 1767 to 1750 to cover shorts and look for support. Look for reversions from here to unfold back to the mean. A close above 1790 activates the 1808 to 1830 levels of resistance and targets.
Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room here, and I wanted to start this session with showing you basically the reports that we published in Seeking Alpha, and move right into the market here. Let's take a look at gold. $1794.50. There is a lot going on this morning here, and I'm going to try to cover as much as I can in all the markets that we're covering here this morning. And we're going to take a look at a special situation also that we're looking at. But in terms of the gold market here, based on the AI for this week, the 1790 is the average price that we're looking at, and the market has traded through that average price, activating basically the targets above. The first target that we're looking at is 1801. Then this is on a daily basis here that we're looking at. These are the numbers for today for day traders. And this is the information that we basically share in our private trading room. And we trade that data live here um, in the live trading room. And so I'm showing you basically here how I'm using this information to trade the house account, to trade my account, and how I'm using these pivot points basically to identify trigger points with specific targets and stops, and pretty much identify the momentum of the market. And I think this is one of the keys that I want to emphasize in terms of what we do, is that this is basically a variable changing price momentum indicator. It's a prospective indicator that identifies the momentum of the market. One of the things that we have found in doing this work now for more than 15 years, actually following the algorithm, is the fact that price is a consequence of the momentum of the market. And so what we did is we programmed that momentum prospectively, and so that if we are able to identify the momentum of the market, which is preceded by price, and price is the metrics that most technical analysts use, charts, you know, and that is after the fact. We have found that in the application of the variable changing price momentum indicator, what it does is basically it extrapolates the extremities of supply and demand. And not only does it give us a very good mathematical probability signal in terms of the extremities of supply and demand, or you may also say speculation. So that is pretty much, as a trader, what I'm looking to do. And as a trader, this is what you should have in terms of the trading plan, or as part of your trading plans of the application of a metrics, you might say, like this. So the way that I'm coaching my traders in my live trading room is basically coaching and teaching how I'm using this information as a GPS. And I pretty much do it in a live environment. I am executing the live signals here when they are signaled and notified my subscribers and traders exactly when the signals are activated. And what I'm doing here for the purpose of my audience here this morning is to share the methodology, the theory in terms of the algorithm, the AI, by reversing engineering the algorithm, the code that was written in C++ in easy language. And so the first thing that it does is it extrapolates the pivot points into colors, into a mathematical probability. And the green numbers that you see, the green levels that you see are basically the average price. And that begins to tell us the momentum of the market in terms of the direction of price. By the price coming down below the average prices, whether it's daily or weekly or monthly or yearly or cyclically, it identifies the trend momentum of the market. And the trend momentum of the market is obviously the direction of the market in the biggest scale. And once we identify the average price, obviously then we can identify the extremes above that average price or the extremes below that average price. Now, the AI embedded in this simple uh, presentation that I'm making to you is basically uh, identifying the mathematical probabilities that when the market reaches the extreme level above or below, you're looking at a high probability that when the price reaches those levels, you are going to see a reversion unfold. And the reversion to the mean basically is a universal application that is a natural application. It's a universal application, and we apply it basically towards the price action on a particular instrument, financial instrument. And in this case, we're applying it to gold. And the same principle applies in terms of the price reaching a mathematical level of resistance. The pivot points or the conventional technical analysis basically interprets these levels as support and resistance, but they don't give you the multidimensional mathematical probability signal that tells you when the price, upon completing the target or within a 10% margin of error, mathematically speaking, tells you that this is the area where you can expect supply to come into the market. And that's exactly what happened here at about the 1801 level. And the price will revert back to the mean. As you can see here, it completed the target and then it traded below the mean, which is bearish price momentum, and it came pretty close to the buy one level of 1772. Now, the color in red, visualizing just the color alone, tells you that this is a high mathematical probability that the price has reached an extreme, in this case above, and potentially the reversion will bring the price down into the average price. Yeah. The market is a living entity as far as we're concerned. And this measures the energy of the market in terms of momentum. Price is the consequence of all of these metrics. And so when you're dealing with price to analyze, you're behind the curve because the momentum already might have shifted upon reaching that price objective. And so understanding quantitative analysis in that sense, that the market will gravitate from the extreme above or the extreme below the equilibrium, the level of energy that is the equilibrium in price. And that is the objective if you're buying it from the extreme below the mean. So if you bought the gold, again, from the buy one level or close to it when you see it, it will give you a signal. The reversion will unfold. Let's watch the market here for a little bit, and I'll be right back here. Let's just watch the market for a little bit. So there are several components, functions that you see here, and I'm translating the AI into those functions. And right now, the market is basically has reverted from below the mean on the daily average, and we use the weekly signals as well to give us clearly where the momentum is going. And so, with the market trading above the daily average and the weekly average above 1790, as the report said this morning, the targets of 1808 have been activated to 1830. The momentum has unfolded, which is the velocity of price within the bigger trend. And it is basically telling us that for the week, the velocity of price is bullish now. It has reverted bullish, and we could be looking at a target of 1808 to 1830 for the rest of this week. This is how clear and defined this is. The bigger trend that we're looking at, obviously, is bullish. It has made a bottom as we expected on September 28, 29, and we are stalling a little bit here because we are in this Fibonacci trendline resistance level. Once we get through this bit of resistance, or you might say we have buyers that are stronger than the sellers, will break through this resistance, and once we get through the 1830 level here, there's nothing above the market all the way up to about 1964. $19.19 is the 100% Fibonacci target that we saw as the high. So I believe that from a technical perspective, you can see the market moving in the right direction. And once we break through this 1830 level here, as you can see, it literally is breaking out completely. And the 1919 all the way to the 1962 level or higher is in play at this point. I want to take a look at silver.
Hi everyone, this is Equity Management Academy with the weekly silver report for October 29, 2021. Summary. The weekly trend momentum of 25.23 is bearish. The weekly VCPMI of 24.12 is bearish price momentum.
I want to stop here for a minute, and the weekly trend momentum is identifying basically the bigger trend on the weekly basis, which is 25.23. And the market coming down below 25.23 or closing below it identifies a bearish trend momentum. the weekly VCPMI, which is the average price by trading below there, also is in a bearish price momentum. But it's important for you to understand that if it closes above 24.12, it's going to negate this bearishness to neutral. So the level of stop if you're short is 24.12. And if you're short, it gives you the targets of 23.55 to 23.13.
A close above 24.12 stop negates this bearishness neutral. If short, take profits 23.55 to 23.13. Trading instructions. Weekly trend momentum 25.23 bearish. The silver futures contract closed at 23.95. The market closed below the 9 SMA 25.23 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Strategy. We are coming in this week with a bearish sentiment, unless we close above 25.23. Weekly price momentum, 24.12, bearish. With the market closing below the VC weekly price momentum indicator of 24.12, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Strategy. The close below the mean activated a weekly bearish price momentum, unless it closes above 24.12. Weekly price indicator. Exit. Longs, sell 1, 24.54. Sell 2, 25.11. Exit. Shorts, buy 1, 23.55. Buy 2, 23.13. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 23.55 to 23.13, and go long on a weekly reversal stop. If long, use the 23.13 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the 24.54 to 25.11 levels during the week. Strategy. If you are short, take profits at 23.55 area of support.
This gives us, again, a pretty good picture of the data that we want to trade for the rest of this week. And so here's the market trading above 24.12, and Nikki the robot told us that this activates a bullish price momentum, and automatically the target of 24.54 to 25.10 is activated, which you see here. It activates this range in terms of the momentum of the market. So if you're carrying long positions, continue to hold, to these targets until they are completed, and the market will tell us at that point the direction. But in the meantime, hold on, as the market in silver has activated a bullish price momentum. The daily signals, the target of 24.17 is just about to be completed. Once the price traded at 5 a.m. above the daily average of 23.94, and you had my subscribers, my traders, had this information before. This was published on Saturday and Sunday, and so you understanding the methodology which I'm sharing with you for my YouTube viewers here as a courtesy for those self-directed traders that are serious traders. This is the kind of information that you get prospectively, so you are prepared when the market opens to execute the signals that are produced by the VCPMI. once this signal was activated and it told you to buy, or that this was a bullish price momentum, automatically your target is 24.17. So if you came in long from below, as we've been recommending, you know, these are the levels that you as a self-directed individual can choose to use to manage your profits. Again, I am not here to show you how terrific of a trader that I am, or if you want to take a look at in terms of the returns that we have, obviously on our live account, you're welcome to go to my website imatotrade.com and take a look at the track record there that we are producing, and we are pretty much using this information, um, and I am sharing this information here. So you're welcome to go to imatotrade.com, take a look at my live trading record, and this is trading in real time. Basically, since we started this in February of 2020, trading in real time in our live trading room in Discord here in YouTube, live streaming in YouTube. So what I do here is pretty transparent, and if you're looking for this kind of trading tool or this kind of methodology, which is completely thinking out of the box, it's contrarian. It's a contrarian instrument that you can use that essentially is a high probability mathematical model. Once again, everybody, I want to thank for the opportunity to share this information with you here, and I look forward in talking to you next time. You be well, take care, have a great trading day.